Welcome to the Well-Rounded Retirement Podcast with John and Jim from CRIS Financial. In this podcast, we help you take a well-rounded approach to retirement planning so you can retire with complete certainty. If you're looking for proven and straightforward retirement advice, ranging from how to protect your assets to how to spend with confidence, this show is for you.
Hello and welcome to Well-Rounded Retirement with Jim Donewald and John Glowacz from CRIS Financial. Today I'm super excited. We have a special guest, and that is Beth Glowacz. And if that sounds familiar, the last name, it is. This is John's wife, and I'm telling you, today is all about John's secrets. We're going to ask Beth all sorts of questions about who John really is while he's not in the room with us, right? No, I'm kidding. Jim, what are we talking about today?
Today, good question. I don't know. What are we talking about today? Today is good. We have a very special guest, is Beth Glowacz, and she's with Cinco Ranch Insurance Services. And if you look at that Cinco Ranch Insurance Services, that CRIS, is where CRIS Financial comes from.
Nice.
Yeah, so we're clever like that. And so I just want, so in full disclosure, I just want to let you know that CRIS Financial is a spinoff of Beth's hard work and commitment to service. And her husband, John, as you know, and I run the the financial services department. But Beth started this property and casualty firm, which made this all possible. So we had her on today. We've been talking a lot about our depth and breadth of what we've got over here at CRIS Financial to offer our services to our clients. And Beth brings a very important component, which is the property and casualty section. So I just want to say, welcome, Beth. How you doing?
Good. Doing good.
And then as long as we're talking about, what got you into this business? What started this?
Started it back in 2005 my husband was a captive agent for property and casualty. He had a issue with his company that they were non-renewing a lot of his business, and he wanted them to be able to have a place to go to, and that was really why we started it. I said, I don't know, John. He goes, Beth, you can talk on the phone. You'll be fine. I was like, okay. So that's started it. I absolutely love it. I came from the corporate world, so this is like too good to be true sometimes.
Yeah, one thing I will say is John's a little bit of a pusher. It's good though. He gets you out of that comfort zone, but it's typically a good thing. So you mentioned this. Why did you go independent versus just another big captive agency?
Independent versus captive. You have one product, basically one home, one auto. Independent, I have an array of companies that I can put people with and quote and shop for them, and I just give them the best deal for the best price, so we have more choices and better rates.
That's how we feel too. Being independent, I like having all these options. So you're not tied to this one company that they decide to be competitive or not competitive. That's great. How many companies do you guys rep roughly?
We have 25 plus major companies. We do surplus lines for commercial, but property and casualties is our main focus. Well,
sounds like to me, I think with 25 companies, you should be able to cover everybody.
Yes.
Right. Now, I know in our industry, the rating of these companies is real important. And with us in particular, they may be with this company for 15, 20, 30 years. Is that the same too with property and casualty?
It is. And all of these carriers that I are connected with are all A-rated carriers. I wouldn't want to put myself with anyone less than that. So that's what I extend to my customers. If I'm not going to write it, if I wouldn't write myself with it, I'm not going to put you with it. It's worked out real well.
I know for us too, that to get in with some of these companies, we couldn't sign up with everybody in the beginning. It was only kind of after we proved our salt, so to speak, that we were good, dependable financial advisors, that we've gotten more and more of these better contracts, better companies. I assume that's roughly the same for you guys too, because I know you've grown tremendously.
Yes, that is. And a lot of new companies come into the area because we're on the coast. So there's a lot of wind and hurricane and stuff like that. So they back off. They don't want the exposure. So these new companies come in and they're like a spinoff of another company. It's really benefited me. There are a lot of standalone companies that come with that. I know people like to bundle and stuff like that, but the standalone companies are, just as good too.
Well, I'm glad you said that, because that led me to my next question, because I still don't get it. I mean, I get it from the company standpoint. I hear all this about, bundling. Well, sure. When we sit down with our clients, we're going to show them whatever it is they're looking for. If we can place it there, we don't consider that bundling. So is that just a marketing ploy, or is there really a big advantage to bundling? Tell me how that works.
Bundling can be really good depending on the company. Now, if they've got fantastic auto rates and their home rates are super high, and I've got another home that I could put them with and save them even more money, even without the bundle, then that's what we do. A lot of people, especially if they've been with a captive agent a long time, they have difficulty sometimes seeing the advantages of not bundling. But we do when we can. If it works out, that's great. If not, they're still saving money both sides. Most of the standalone home carriers will give a discount for having the auto in the agency. It's not as large of a discount as you would on a bundle, but you're already beating the price of the home with the bundle. So, it works out typically.
Yeah, I always think of that, because the other one that I hear all the time, and this one really kills me, where they say, pick your own price or just get what you need. I don't know what I need. That's, I came to Beth a long time ago and asked her, I'm looking for some direction. So when they say name your own price or just get what you want, it sounds to me like they're possibly shooting themselves in the foot. I mean, do people really know what they need before they get to you?
Honestly, the majority of them do not. They want cheap. And we have to explain to them that the state minimum is not the best for them. They get in an accident, they would be liable for as expensive as vehicles are nowadays. And if you totaled one and your coverage only goes up to $25,000 in personal property, or not personal property, property damage, then you're in some trouble there. They could come after you personally. And so we try to educate. And the best middle of the road is like the 100, 300 limits. That gives you very good coverage. So
just for people so what is the 100, 300? Explain that to me a little.
$100,000 per person, $300,000 per accident.
Okay. Yeah, because we see here with the fog, whatever, you see 20 cars pile up. I'm sure that's a problem.
Right.
Beth, one thing I'd like to ask a question real quick, because Jim just said, it sounds like people could be shooting themselves in the foot, but at the same time, I kind of think you're putting yourself in a position as well, because I know that captive agents, going kind of back to that and looking at bundling and all that, captive agents, they earn all sorts of incentives for their sales because they're with one agency. And I've worked with a few people that have been in a major agency, which will remain unnamed, but based on their sales, they get trips, they get all sorts of things like that. But when you're doing this for clients and picking and choosing the best price for them, and you're not using the same company, you're kind of missing out on those types of incentives, right?
I could be, but what has made my business successful is that I put the client's needs first. Whatever the best rate, all of our companies I've already said they're all A-rated, so it doesn't matter which one I put them with. We always try to put the best rate with them for the best coverages. That's fantastic. Does that answer your question?
Well, yeah, absolutely. And I think independent agents are definitely the best way to go. I've always thought that. And I just kind of see two sides to that coin. Independent agents like yourself, I really believe you have your client's best interest in mind. And some of those captive agents are really looking for their next big score. And that bothers me. So I love the fact that you brought that up.
Well, the other thing that you said that really caught my ear was this: I want the cheapest price, and I get that, but I've also been of the experience, because I've had that motto before, and being cheap doesn't necessarily save you money. You end up being big time later. And I've heard your guys, as I walk around the office and I hear them talk on the phone. It's here's what you really want to have, and here's why. I mean, we can do that for you, this super cheap price, but like you said, be prepared. You're going to get in an accident, and somebody else is going to own your home at the end of it. Just saving money now. It's that short-sightedness. We run into that with some of our clients too. It's the education process that always saves that from. So who's like your ideal client? Why does it make sense for me to go to the independent? I have my ideas. I think you guys' service is great, but so what is it that you guys do that a lot of these other firms aren't doing?
We shop at every renewal, which is a lot of work, but we want to make sure that on renewal that you still have the best rate that we can offer. You're going to have little rate increases here and there. Sometimes you have great big ones. Somebody's had an accident or a speeding ticket or something like that. Then you have to explain, hey, this is why your rates went up. But we shop and we want to make sure that they have the best rate. And so instead of them shopping, we shop for them.
I know when people shop, or I've shopped too, if you don't know what questions to ask, they're going to make this sound great, and then all of a sudden you realize you're missing. So I'm assuming, though, you guys have all the discounts that everybody else has, right? I mean, is there anything special you have or don't have as far as the discounts go?
No, they're basically all the same. They have the new thing right now for discounts is this, every company has a different name for it, but it's where they monitor your driving habits, and then they give you a discount based on how well you drive in a certain period of time. Some are 90 days, some are 6 months, some are the lifetime of the policy. So it just depends. A lot of people don't like that, though, because they feel like Big Brother's watching them all the time. And I get that, but it is substantial savings.
Okay.
It can be if you don't have a heavy foot or a quick break.
So some of us shouldn't. Yeah, I was going to say some of us shouldn't use that, right?
That's right.
And do you advise against that if somebody comes in and says, "Look, I'm a lead foot"?
Right.
Yeah.
The other one I've got to ask you about, because I see this all the time. So I'm driving down the road. We live in Texas here, and on the highways, throws up a lot of rocks. I get these dings on my windshield all the time, and everybody wants to fix them, and they say no cost, just come on in, we'll just run this through your insurance company. Is that a good idea or a bad idea?
Well, I'm glad you asked that, Jim. I had an issue with a customer once before, a while back, and I called to find out about it because they're just the star, I think is what they call it, needing to be fixed. If you call the company first before you have it fixed, usually it's at no charge. If you don't, then it could fall up underneath your comprehensive deductible.
Okay.
So, I mean, it's best to call them first and reach out to them, because the majority of them are doing that because we have so many, trucks and everything around here.
Yeah, I know it's a problem, but I always wonder too. It's like you can't. There's no free lunch. I'm always worried about that kind of stuff. When I see that, I go, well, how many of these are gonna eat before I'm gonna pay for it? And so I just want to be on top of that. What other things can people do to keep their costs down?
Well, they can adjust their deductibles. That helps sometimes. Sometimes it doesn't. I see it more helpful when you have children on the policy.
Okay.
Parents nowadays are buying their kids new cars, so that means full coverage. And when you put a young driver or new driver on a brand new car, there's a lot of extra cost on that.
Yes.
We try to give our advice, but they still want to buy the new car. Okay.
It was my experience when my son, and we did not get him a new car, but it was a nice car. Even I was very shocked. I mean, it was probably double our bill, or if not more. So
boys are always more expensive than girls, and the limit on the age is after 25 on boys and after 21 on girls. The rates are supposed to come down. The boys, if they have what I call a beater car, just a nice car, but you don't have to have full coverage, that's really the way to go. The new drivers, they're learning to experience to drive. If they dent it on something, then who cares? Or, it's not a big deal.
So you're saying like the collision?
Right.
Yeah. So I'm not so worried about that because
Right.
the car's on. Okay. What about I get a speeding ticket? Sometimes they'll offer you the choice of going to class and taking a class or something. Is that a good idea? How does that work?
That's an excellent idea, but people tend to pay the ticket, and then want to do that, you have to actually go to the court and request it. Once you've taken it, it does not show up on your driving record for insurance purposes. So instead of being a $400 hickey on your bill, it would be nothing because it doesn't show up.
So go to court first. Is that what you do, Eric?
I've done that.
Well,
yes, actually. Yep. No,
Call. I think you can call and ask, or I don't know these days what's going on with all the COVID stuff, but I know my husband's had tickets before, and he's always had to go to court.
Yeah, for us, you can actually do it once every 3 years. And so I've only had one speeding ticket in the last 10, but that was the first thing. In fact, the state trooper that pulled me over told me that you can go to, I think it was diversion class or something or other. So heck yeah, I took that class. I don't want it on my record.
No kidding.
In Texas, it's every year now.
Oh,
Once a year.
nice. Well, that's even better.
So come on down.
Exactly. But don't speed down here. Just, just come down.
Don't speed down, right? Carefully. Just take the class. Don't speed. Take the class. All right. Well, I was going to shift gears just a little bit here because I know, a big part of it is the auto, but also the homeowners insurance. I came down here, I came from out of state, so I came down here in 2012. It was a huge savings for me, which was nice. But what tips do you have? There's so much when you buy this, whether you have a mortgage, don't have a mortgage. They always ask me, do you want this replacement cost or do you just want, help me with that process a little bit. How does that work?
Well, I would advise everyone to get home insurance, whether they have a mortgage or not, because when you self-insure and you have a major leak, or like we had with this freeze that we had a couple weeks ago, that could be thousands of dollars out of your own pocket if you weren't insured.
Is this where we're getting again? We're saving money and killing ourselves. I mean, this is what I think of as exactly this: that you're saving $500 and then your house catches on fire and you're out $300,000.
Exactly.
Okay.
Exactly. Replacement cost means what the market value is today, or the replacement cost today for your home. So if you bought it for $200,000, but to replace it today it would be $350,000. Then that would be the replacement value.
Does that fluctuate a lot?
It can. Each company has their own replacement cost estimator, and they're all different. And sometimes you really have to. I was working on one yesterday. It was like 2,100 square feet, and they wanted to cover it for $325,000. I mean, that's more than a custom home. Our custom homes here are like $150 a square foot. That was $169. It ended up being. You have to manipulate. You have to call the underwriting and say,
see why.
Yeah, it's a challenge sometimes, but it's always worth the replacement cost. And we don't actually sell any actual cash
really?
value. Usually on a rental property, maybe when they just want the bare bones, that's what we do. But on a home, no, it's always replacement cost.
One of the things I see, more so in your industry, our industry is getting this way, but this kind of quote yourself kind of deal. I mean, what do you think of that? Because to me, it seems like anytime I've wanted to do anything, I'm still old-fashioned. I want to call. I want to talk to somebody. I want to make sure the information is correct versus just punch some numbers in the computer, see what comes back to me, and then find out later, I didn't put something in or I was entitled to a discount I didn't get. So what are the basic information they have to give you? I mean, why does everybody like this online quoting stuff? I can't imagine it's that accurate.
Well, for the auto, I'm not sure about the home online, but the auto is really popular right now. But on the home, all we need is your name, address, and birth date to run a quote.
It's pretty easy.
Now, on the auto, you put some stuff in. They don't run reports on those quotes. So if you've got an accident or you've got a speeding ticket, it's not going to show up on that quote until it gets to the end where you think you have this great price. And then at the end, they're going to go, oh, no, it's another $300 because you had an accident. So
everyone loves that great feeling of the surprise, not to your benefit at the end. Everyone likes that.
That works for me. That's how I push that a lot. Yes. They haven't run the reports now.
You guys do flood insurance? You made me think of that because I had a couple I knew that had some flood insurance. And here again, it gets back to that same thing we talked about, trying to save a couple of bucks. Well, do I really need the flood insurance? And then sometimes yes, sometimes no. Is that a government program? But is it just a matter of you're able to write it? Can anybody write it?
It's government. It's FEMA.
Okay. And
then we have what they call third-party administrators. Each company you can write through them, but it's still a FEMA product. I recommend, especially since we had that big flood where these people that were not in flood zones, their homes had 5 feet of water in them, and they didn't have flood insurance. And then you have to go out and get the money from the government, a loan, so to speak, and then you're paying that back. So if you're on the fence, I always tell them it's a peace of mind issue. If I were them, I would have peace of mind and not have to worry about it. And then, it's money well spent.
Yeah, I'm on a floodplain, and I bought it based on your recommendation. And we've had houses right by me flood, so I didn't have to use it, but it helped me sleep a lot better when that was coming up. Sure. Speaking of which, the last thing I always think of is umbrella insurance, because I know with most people have a house and a car and other stuff going on. How does that play into the picture? When do you recommend that? Do they need to bring it up? Do you normally say when is that appropriate?
Well, we bring it up sometimes, especially if we see that they have the higher limits. If they're coming in with minimum or $100,000, that would be 2 jumps up to get, because the requirement for an umbrella is you have to have $250,000 per person, $500 per accident. Umbrella is designed to extend your liability. So you're on your home insurance. People usually carry $300,000 or $500,000 liability on your homeowners. And if something were to happen at your home, somebody got hurt real bad or, got burned by a chimenea, which actually happened in one of my customers, that's what the umbrella would be for. If the it extinguishes your limit on your home policy, then the umbrella policy picks up where that leaves off.
And aren't they relative? If I remember correctly,
they're
a lot of coverage for not much.
It's like the minimum. I mean, for $1 million, it's about $250 to $300 a year, so it's pretty inexpensive.
Beth, I actually have one more question for you, if that's okay.
Okay.
All right. You talked about the umbrella policy, which as a pool owner, I totally get. So yeah, I've got an umbrella policy. But what is your best advice for documenting the items that are inside your house? Because with so many people working from home, I know a lot of equipment has had to come home. My wife is working from home. She's got her computer set up, and I set her up with multiple monitors and yada, 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 all that kind of stuff. All of our possessions are very important to us, and getting the house replaced would be great, but all the stuff inside, I'd like that replaced as well. What is your best advice for people documenting that as you gain more items and so on and so forth?
I would, the cell phone videos are so easy to use now. I mean, I remember when John and I had our first house, we paid somebody to come in there and do a
cameraman,
a VHS video of all of our stuff. And then we put it in the safe. And I'm thinking, man, this is so good now because you've changed something, you add something, it's just another video. And then, you can upload those too somewhere for safety if something happens to you.
Yeah.
Right. So, yeah, that's a very good question.
Great idea.
That is a good question, Eric. I'm glad you were listening. All right. Well, I got to brag on Beth a little bit now. I just want to let you know that her team has taken care of all my personal stuff. So when she doesn't get involved, she's got a great team here, very professional, very happy. She mentioned it earlier, which I was kind of surprised when my renewals come up. They're kind of running comparison reports, and I'm not even asking for that. They're just running them to see if it makes sense to maybe move this policy, whatever. I can tell you prior to working with Beth and her team, that's never been done. The only one that ever made changes to my policy was me if I felt there was something to do. I've never had anybody proactively kind of see is this still competitive in the market.
When people have escrow on their on their mortgage, there's a lot of times those people don't even know how much they're paying unless it really affects their payment, their mortgage payment.
They don't see it.
For example, one former client, his insurance started out like at $1,400, and over the years with this captive agency that he's with now, he was paying $3,900. And they don't,
Yeah, ouch.
Yeah, and they don't realize that he could be getting a better rate somewhere else.
Well, they don't see it. Out of sight, out of mind,
It's, they don't have to do it. It comes automatically out of their mortgage payment. So, yeah.
That's the problem. That's the good news and the bad news.
I know, right?
Well, I want to say thanks, Beth. Appreciate it. Like I said, I think the service is great, good pricing. I'm happy. Another reason I brought Beth in today is just another extension. I wanted to show how deep our bench is. We have a great set of people working over here with various backgrounds. We've got property, casualty, financial, life, you name it. We have a pretty deep background on that. And if we don't know it, we know where to get the answers. So once again, thank you for your time. I appreciate it. I know you're busy.
Welcome. You're welcome.
Jim and Beth, this was fantastic. I really thoroughly enjoyed this. All I know is that John is a blessed man. I had so much fun meeting you today.
Say that really loud.
Yeah. John, in case you're listening to this podcast, which I know you will, you are blessed, sir. Treat this woman well. Beth, I do want to ask you one last question before we sign off. Is that okay with you?
That's fine.
All right. Well, we've already spoken a lot about, why an independent agent is so important. And I think that we really shed a lot of light on the difference between the two. If people are listening to this podcast right now and saying, yeah, I'd really like to find out how an independent agent is different from what I have or who I have and what they can do for me, we'd love for them to reach out to you. What's the best way to contact you?
They can look at our website at CincoRanchInsurance.com, or they can give us a call at 281-391-7608.
Thank you again so much for being on the podcast. And of course, our last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Well-Rounded Retirement Podcast with Jim Donewald and John Glowacz. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Jim and John come out with a new podcast, it'll show up directly on your listening device, which makes it much easier to share these podcasts with your friends and family. Again, thanks so much for listening today. For everyone at CRIS Financial, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Well-Rounded Retirement Podcast. Click the subscribe button below to be notified when new episodes become available. The The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of CRIS Financial. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your investment planning.